Hi folks, Scott here, and this is the wrap for Friday, August 16th. Sort of a quiet day today. Very typical after an unfilled down gap or a trend day in either direction. You'll tend to get a consolidation day with the price action and have it two-sided. Before I get into today, though, let me show you the results of fading gaps on Mondays after a 20-day low close. And this was more than a 20-day low close. Probably, I'm just eyeballing probably about around a 30-day low close. But I want to, I don't want to be right on the fringe and test 30 days. I want to capture 25-day low closes and 35-day low closes. So I'm going to use a 20-day low close. And let's look at fading gaps on the subsequent Monday when above a 200-day moving average. This is Gap Trader, my back testing tool. And there you go. More than 2-to-1 odds of gapping up on Monday after such a scenario. And historically, first glances, both are very unprofitable. But this is using an end-of-the-day stop, not something I use nor something I recommend. What you always want to do when you see these data points here in terms of profitability, always take a quick peek at the largest loser and the largest loser over here and compare it to the total net profit. Almost all of the losses for both the longs and the shorts were comprised of one single trade. So it doesn't tell us a whole lot. In 11 years of data that I'm looking at right here, we've had big trend days in both directions after such a scenario. I just don't think you can read a whole lot into that. The rest of the time has been basically a break-even trade. Now down gap, tiny sample size, appears to be a little bit riskier for longs. Up gap appears to be right in line with historical norms in terms of odds of gap fill. We are stretched to the downside though, and we're still above the 200, so I'll certainly look very closely before I short any up gap on Monday. But there's a little food for thought to noodle on over the weekend. All right. We ended up with nominal gaps, unfortunately. We had some pretty darn good data, especially for a gap up. I did not enter pre-market. I did consider it. I did get a couple emails from some folks that entered early because it was a pretty good setup. And I'll show you what I mean. At a high level, the worksheet, any gap up today between the high and the close met my criteria of 60 and 1.3. Up gaps, 60th a month, that was a little bit of a concern. But OPEX Friday was a big positive, and after an unfilled down gap, big positive. So I was definitely going to trade it if we gapped up. Down gap was a little bit more problematic in terms of unique factors and the guides. Showed last night this unique pattern, 13 of 18 wins, nice profitability. Let's see, in August when below a 10 and 200-day moving average. This is what I post each morning, by the way. This is my pre-market comments, today's gap play comments, posted around 9:20 a.m. Favor shorting up gaps, cowboy gaps look good. Those are gaps up as well. But bottom line is a down gap, which is what we ended up with. In some indices, it was actually mixed because the sell-off in the futures resulted, I believe, in the ETFs gapping down and the correction. Most indices gapped down, futures and ETFs. Still, nothing looked too attractive for me, and I said only if the S gapped up would I short it. We had to open up by at least 1 point. Didn't happen, so no trade for me. But there's generally, and as the data showed, a downward bias on OPEX Friday. It was often a downward bias. So let me show you actually the 15-minute guides. And this is our old format. We had a problem with this. Russell table right here is not posting. It's bizarre. It's on our servers. It's just not getting transferred. So we've got a little bit of a technical problem of late. We'll get that sorted out. But so this is an older format if it looks differently. The key thing to note here is check out the odds for the high fade. I'm looking for 55 and 1.1. Check. Check for the YM. Check for the NASDAQ, 3 for 3, and leans that way, almost at my criteria for the Russell. So basically 4 out of 4 favored the high fade, clearly. Looking at the ETFs, the spider leans that way. Diamonds clearly favored the high fade. Qs definitely. And only the Russell ETFs, so 7 of the 8 either met my criteria or were right at it, certainly leaned that way. So it was a worthy trade, plus the advanced study on gaps in the indices, or advanced study of the range trades, 15-minute range trade for both the Russell and the S showed a favorable setup for taking the high fade on options expiration Friday. So with a change of sentiment as defined as that unfilled down gap yesterday, knowing there'd be some some residual momentum left over today, more than likely, is how that often works. Could result in a dead cat bounce. We were rallying into resistance on this tiny gap down this morning. I had strong data for the high fade, so it was a pretty much a no-brainer to fade. I didn't think twice about it. However, it was a matter of where to do the high fade. Now, the high fade, technically, you would go short one tick below the 15-minute range here, but that was just above gap fill. And it was a reasonable area with one exception. The ETFs, because of this sell-off in the futures yesterday afternoon, they weren't going to fill into up here in the 58, 59 area. In fact, you look at the ETFs, you'll see what I mean. I don't know if you can tell. See how much bigger in a relative sense the gap was? It was about 30 cents, equivalent to 3 points in the ES, versus on the ES it was 1 point. 3 ticks of a point, open at 16, the white number 1655.50. So I decided I would wait and sort of make it like a do the 15-minute range trade, but do it as it filled the gap of the spider, akin to doing a fade the fill trade on the ETFs. So I waited till 58. I posted in the trading room. I used the same size stop. Actually, I used a 4 1/4 point stop to get it above. I think the midpoint yesterday was at 62 or 62 1/4. And scaled at half at +4, and I told everyone my second target was going to be at 1650.5. Now I'm not making that up, because you can see we just barely made it there today. In fact, hold on. There you go. Normally I've had the room shut down, but I've been leaving it open for our members at night. This is commentary from this afternoon when it was actually filled. You see a bunch of people caught more than the 4-point target. Tony made 6.5 points. A bunch of people made more than the 4 points. Anyhow, it was a nice trade that a bunch of people talked, and you can see on my announcement tab here. See, I post it. 9:51. I was taking the 15-minute high fade short at 1658 delayed entry, half size, because there was some risk with a 4 1/4 point stop. That namely being so stretched to the downside, but 4 1/4 point stop just above Globex high with target 1 4 points, target 2 7.5 points. Exactly what I did. So today, I nailed it. Absolutely nailed it. It got short near the highs and caught the lows. So whatever that is, that's the exact opposite of a Buffalo trend. It did take some heat. It took almost 3 points of heat. But and in spirit of disclosure, had you entered, which I'm sure some people did do, in fact, I know of at least one that, actually a couple that entered right per the range guides, and they got stopped out for a rollover. So they got buffaloed. That's a little bit of tough luck there. But it did go down and test this confluence I had down here, and just looked like it'd go down and fill that gap I've been talking about the past few days. Let's see if you can see it. See that right there? 48.50. I talked about the last night's video. That's why, and I didn't want to get too greedy, so I was going for this basis 50-day moving average, thinking that had a pretty good shot getting hit today, and as it turned out, it did. That was my only trade of the day, so that was a sweet, hold on, way to end the day. Yeah, nothing else. We showed some data favored some weakness at the end of the day, but after that nice win, I just decided to call it a day. So that was my day, and that is the wrap for Friday, August 16th. Have a good one.